And welcome back to halftime. Let's get to some stocks on the move. Berkshire to acquire OxyChem for $9.7 billion. This is the chemical business of Occidental. $9.7 billion, all cash deal. You're seeing Berkshire pull back a little bit. Oxy pull back a lot, but you're a Berkshire Hathaway shareholder. What do you make of this deal? I
think it's intriguing. I like it, but I have to put it in perspective that versus a $300 billion plus cash pile, this is 3% of that pile is probably what he earns in about 8 months. So it's interesting, but it doesn't move the needle that much.
All right, interesting. Why doesn't it move the needle? Clearly, this is very adjacent to the materials sector, the idea that you need raw materials for a lot of the production that we're seeing.
It's a tuck-in. It's a tuck-in acquisition. I like it. Don't get me wrong. But this isn't, they've got a huge energy. They have a chemicals business in Lubrizol already. So it's a tuck-in. It just doesn't change the thesis. If they were putting something together that had like many tens of billions of dollars involved, then I'd be like, whoa, what's going on?
Okay, fair enough. Again, Berkshire Hathaway pulling back about 3/4% of 1%. Occidental actually down about 7% right now. Want to move on to some other calls. Colgate Palmolive target cut from 98 down to 91, but maintains the outperform at BNP Paribas. Jason, you own this one. We were talking a little bit about this earlier. Yeah. Staples under quite a bit of pressure.
Yeah.
Actually, a really good note. It's not specifically about Staples, but from Bespoke on consumer-facing stocks over the last couple months. Really talking about retailers, but I think it fits the bill with Staples too. Under a lot of pressure.
Yeah,
what do you make of this?
Sure. Yeah, so for Colgate, it obviously is down 13% year to date. I think for me, there's some deceleration growth in personal care. I think that's hurting the stock. Persistent inflation in raw materials. We were talking about raw materials earlier, so I think that has been a problem. But, for this particular stock, I like 3 to 5% organic growth, sales growth for the names, raising dividend in 60 straight years, so the dividend now is at 2.5%. Their management team also is has multiple levers on managing costs and extracting inefficiencies. So I think for me, this is one that obviously has been in the penalty box so far this year, but I think the earnings recovery will come through into next year.
All right. We were just kind of showing that chart. We showed it for a second with the retail names under pressure over the last couple of months. I want to talk about the consumer, Shannon. Is this a troubling sign that these stores that they don't only cater to lower income consumers, but a large part of their customer base is lower income consumers? Is this a warning sign about the broader economy, the fact that these stocks have been moving considerably lower, almost a straight line down?
No, I think I see it a little bit differently in terms of the margin that these companies operate in. And so if you think about the slim margins on many of the SKUs that they have on the shelves, I think that investors continue to be concerned about, potential continued tariff transmission. And so you're also, potentially looking for a continued trade down, which we really haven't seen from higher income and higher middle income households into these names. But I think this is more on just concerns that maybe we haven't seen the full margin impact of some of the tariffs. That's just in my view.
All right. Not a call, but some news. BlackRock actually launching an AI tool for financial advisors. Its first client, Morgan Stanley Wealth Management. Jim and Jason, you both own BlackRock. Jason, I'm going to start with you. What do you make of this?
I think it's a very interesting tool. I think it speaks to innovation for BlackRock. Listen, AUM growth is up 15%, revenue growth was up 13%. It's the largest player in the ETF business. So I continue to like this name. I think they're focusing on the right segments, and we'll continue to hold it as a financial core holding in the financial sector for us.
BlackRock shares up just about 0.5% right now.